There's one thing that you've said, though, that the cyclical areas can improve and outperform on the downside. You've also mentioned something else, that an equal weight S&P can outperform in both a down and an up market. Why do you think that's the case, Mike?
Well, it's only going to work, John, if we're right on our fundamental view. And that fundamental view, as you know, is we think we're having a V-shaped recovery in the economy, and in the earnings revision breadth is starting to turn up sharply. And really what that means for next year is that there's an operating leverage story that is underappreciated. And if we're right about that, then that means that the market should broaden out. Okay, and that would argue that an equal-weighted S&P should outperform the market cap-weighted. Right now, the market is still struggling or hasn't decided yet if that operating margin story or earnings story is for real. Right, there's still a lot of skepticism out there about what next year really is going to look like, and that's why the market has gravitated back to these COVID beneficiaries and why it's gotten narrow. That's the nature of the correction. That's why we think it's important to acknowledge it started back in June, and that keeps our head on the swivel so that we can actually take advantage of this correction as it's happening.
So, Mike, the last 2 weeks, jobless claims have broken down a little bit, and I wonder if the team at Morgan Stanley see that as a challenge to their more constructive view. How do you process these data points at the moment?
Well, yeah, I mean, look, our economists have acknowledged, I mean, like the high-frequency data surprises have been extraordinary. I mean, we've never seen the surprise index this high, actually, and that's a function of, expectations having gotten cut too far. And so naturally, we saw a big surprise. The rate of surprise is going to have to come down, right? So that rate of recovery is going to have to come down. But that doesn't mean you're not still making progress. But this is part of the wall of worry that, you always have at the beginning of a new economic expansion. I mean, it feels no different to me than it did in 2009 or really back in 2002, 2003 or back in, 1990, 91. I mean, that's as far back as I go. I've been doing this for so long, but it feels similar. There's always something to be worried about. We're in a recession. It's not going to be a straight line up. And, there's a lot of pain out there in the real economy. And that, that's hard to, it's hard to get too bullish. And that's why people are still, somewhat negative here.